The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the December 8th, the magical Monday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. And let's make sure we have an extraordinary one. Now, the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 11 o'clock in the morning. I do want you to know that I'm absolutely grateful for your presence here. But even more important than that, and that's this. During this next 53 minutes, I'm here to serve you. So feel free to send me an email, send it off early, and send it to Steve at TFNN.com. Inside the subject heading, please put radio show question. And of course, if you're inside our Tigers Den, and you should be, every and any ping will do. So let's go ahead and get this show started on a marvelous Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Well, we begin our day with a bit of a mixed bag out there. You got the Dow down 179 points, S&P's off 23. 81 for the NASDAQ. Russell is up 2 points, 1 point. 51 points the upside for the transports. 15 for the semiconductors. We're off 55 in the NASDAQ composite. 70 points in the New York Stock Exchange composite. Gold's off 33 bucks. Silver down 80 pence. Light sweet crude off 85 cents. Natural gas down 33 pennies. And you've got the copper. Wait a minute here. Yeah, natural gas down 33 cents. Grade and copper's down a nickel. I've got the charts for the Dow. So first, take a look at the daily TD9 counts. That's panel number 3 from the right. That's panel number 1, 2, 3, 4, 5, 6 from the left. Says D-TD9. All those that have a 9 and a star, those are confirmed TD9 count tops. Today are completing those patterns. The Dow Transports completed this pattern. It's got a 1 and a star next to it. It had completed the TD9 count pattern on Friday. You can see right here, I've got that up on our screen. If price today closes above 17,255.02, it will negate that signal and talk about a strong upward momentum move that is underway. However, you've got monthly profile resistance, so it's got to be able to clear that. That's 17,308. We're trading right now at 17,234, so you do have resistance above. Even if you get a negated TD9 count top, in fact, the transports, let's see if patterns repeat here. The transports last week, on November 11th, completed a TD9 count topping signal. The very next trading session, it was negated. So I would have said that's a strong upward momentum move, and that is a true statement. Now, why did it stop right there? I'm not going to go investigate that. What I do know, though, is that the day following, you got that little bear sash candle, and that generated a sell the D point top. So what's needed here, if there's a close above 17,255.02, is a bearish reversal candle. If we don't get a close above 17,255.02, which should unfold, its price should begin to retrace back to its oscillator change line. And that right now is at 16,805. We've got TD9 count tops. They're all over the place. If you take a look at the cash indices out there, you got one for the Dow, for the S&P, for the NDX 100. You do not have anything for the Russell 2000. Transports, we just covered. Semiconductors are going to complete their TD9 count top as the NASDAQ composite and New York Stock Exchange composite. The spot volatility index is going to complete a TD9 count bottom pattern out there. The SPY's got a TD9 count, the Qs, the diamonds, the Russell 2000. So let's take the Russell 2000. That one hadn't confirmed a TD9 count top on Friday. Completed that top on Friday. If we get a close above last week's high, that would be the price point of, give me a moment here. Sorry about that, folks. Something slowing something down. Okay, so when I want to find out which high it is, that's 252.66 and 252.66 are both the same. So you need to see a close above 252.66 to negate that signal, and again tell you about a strong upward momentum move. Probably worthwhile to watch the IWM today. You've got TD9 count tops. The financial sector is another one that completed that on Friday. Let's see what it is doing today. It's off about 25 cents. But what's the high that we're paying attention to? Looks like that high was Friday's high. And that number is at 53.93. If price were to close above that, we likely head to higher ground. Short of that, price should retrace back to its support level at 52.95-ish. You've got TD9 count tops inside the consumer discretionary sector, inside the communications sector, the XLC, much like the financial sector completed its TD9 count top on Friday. Let's go see what that threshold level is. We're down 56 cents this morning. Let's see what that threshold level is. It's going to be Friday's high. Friday's high, that number is at 117.62. We've already tested and rejected that. That doesn't really matter much. But it closed above 117.62 and negate that signal and talk about a strong upward momentum move. So the ones that already have the completed TD9 count tops, those are the ones you should definitely write down, pay attention to, see where they do at day's end. Do they negate those TD9 count tops, or do they or have they taken hold? And then you can take a look at, well, have we moved below? I don't know if we closed below, but have we moved below Friday's low out there? We haven't. Makes things a little bit questionable. All right, so let's go take a look at a couple of things out here. Let's first look at the advanced decline oscillator and spot VIX index. Advanced decline oscillator is on your left-hand side. It still is above the zero threshold level. As long as that remains above the zero threshold level, buyers have an edge. The New York Stock Exchange, as you can see, is completing its TD9 count topping pattern today. Price should pull back to its oscillator and change line. Currently printing 21,670. If price were to close below that, that would tell us that it's lost momentum and we likely head lower. A price target to the downside could be 21,107. If we take a look at the spot VIX index, completing its TD9 count bottom pattern today, it should rally up towards its oscillator and change line. That number, 1791. The 50-day exponential moving average is at 1822. It would require a close above the 50-day exponential moving average in order for sellers to have an edge. Seems like they have an edge right now, and that's true because of that TD9 count bottom pattern that formed on Friday and is completing today. So I would say more likely than not, this should rally up towards that 1791. That should continue to keep pressure on the S&P 500. Let's close this down. Let's go take a look at daily equity future contracts out here. Pull those up here momentarily. You'll see the ESENQ and the Dow, all completing TD9 count topping patterns today. They're oscillator and change lines. Those are the levels that you're paying attention to. That's at the 68.34, 25.482, and 47.639 respectively. The Russell 2000, no topping pattern at all. So it's going to have to take its P's and Q's from the other three out there. Not much more to report there. Let's go take a look at the intraday chart for the ES Mini. Let's stick with it. Let's start with it. In the case of the ES Mini, the 15-minute time frame chart is in bar number 8 of a TD9 count. Now, when I take a look at that, I can also see what other support do I see out here. Well, the support that I see that perhaps is most important is 68.48. 68.48 is a center of its bear structured profile that price closed above for more than 2 sessions out there. If it's only a counter trend move to the downside, this is where it finds support. 68.48. Steve Rhodes with TFNN. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. Let's take a quick peek here at the U.S. indices out here. You'll see all the TD9 count patterns. You're going to take a look at the Dow Jones. Cash indices should target 47,609, S&P 6826, NASDAQ 100 25,450. Again, on the Russell 2000, we don't have a topping pattern. The SOX should target the 7138 level. The transport 16,805, NASDAQ Composite 23,369, and New York Stock Exchange is getting close to testing that oscillator change line 21,666. Those are the first levels of support, and we got all kinds of TD9 count tops that are out there. Pretty good chance we're going to at least see a 2 to 4 day retracement out there. Let's go take a look at. Let's start with the requests that have come in. We've only got 5. But let's go ahead and begin those. The first one coming in from Dan inside the Tiger's Den. And the ticker symbol that we're looking at here is KZIA. And KZIA right now is trading out at $16.15. Likely going to go target the $18.79 level. That is the top of its monthly profile. If we take a look at the daily time frame formed a Rhodes Momentum Indicator top 2 days ago, December the 4th out there. The high of that pattern is 1625. A close above 1625. A close above 1625 would negate that signal. So you still have a TD9 count top for the daily time frame. The weekly doesn't have any kind of a top. In fact, it's more likely an A to B equals CD pattern on the upside. I would say its price projection level, Dan, is going to be the TD9 count breakdown level. That's at $21 even Steven. So it formed a real nice Rhodes Momentum Indicator bottom on its daily time frame back on November 19th when it gapped to the upside. So you've got a Rhodes Momentum Indicator top. The key level again to be watching is 1625. You close above that, you negate that signal, and price continues to move higher, with 1879 being the next likely price target out there. So Dan, hope that helps you with this instrument, and as always, thank you for your requests. Duncan Steve inside the Tiger's Den has got a couple requests. That is, the first request is to take a look at WRBYs. Was that Warby Parker? I don't know what WRBY is. I know what ARBY is, though, but WRBY, just kind of curious here. Yeah, it is Warby Parker. That was pretty easy, I guess, to figure out. So Warby Parker today, Dunk, is attempting to form an A to B equals CD pattern to the upside. The B point is labeled B on my system. It happens to be part of the Chapman wave tools out there. It's a swing point from November the 26th. The volume out there is 2.7 million shares. So far today, 2.2 million shares. So you got a confirmed A to B equals CD pattern to the upside for Warby Parker out here. Let's go figure out where it's headed to. Now, it's going to have some potential resistance even on the A to B equals CD if it expands beyond this level, which is 2264. That's its TD9 count breakdown resistance level. So I'd say that Warby is probably headed towards 2264 to 2327, the initial price target of this A to B equals CD pattern to the upside. It's got some resistance up above on the weekly time frame chart, happens to be the oscillator and change line, currently printed at 2108. So a close above that would be a bullish outcome. The monthly chart just shows a consolidation with inside its profile, and that's between the range of 1685 to 2651. So you get an A to B equals CD pattern to the upside today. Now that still requires a close above that swing point, which is at $20.37. Shouldn't have any problem doing that, but you just never know. So that's what's going on with Warby Parker. You want to take a look at DYN. DYN. What could that possibly be? Dyne Therapeutics. Well, let's go get over to its charts out there. Dyne Therapeutics is trading out right now at $23.28. It's trying. You want to see it close above, Dunk. You want to see it close above 23.20, preferably for 2 consecutive days. 23.20 is a level where a counter trend move to the to the upside would come to an end. So if it goes above 23.20 today and 23.20 tomorrow, you should be able to get up to $25 at top of that daily profile. On a weekly time frame, there's nothing to stop it from doing the same. The weekly time frame says, in fact, if the daily moves up to 25, it can clear 25. It's got its eyes set on 29.72, the TD9 count breakdown resistance level for the weekly time frame. Now, the weekly time frame, so it actually formed a sell the D point top on Friday. But that right now, that pattern is really being negated. We're not even going to go there. The monthly time frame chart. The monthly time frame chart, just like the daily, has a price point that price must overcome to say it's not a counter trend move to the upside. The monthly could come into play here. Its level, that would say the same thing, is between the range of 2311 to 2581. So how do you work this out? You let the daily do its thing, see what signal it gives to you. If it's rallying to the upside, should be targeted at $25 level. Then the real question is going to be 2581. Can price takeout close above 2581 on the monthly time frame? If it does that, then I'd have to say that Dyne Therapeutics is signaling to you that the rally is real. Let's go take a look at the IBM. This is for Texas Tom, and he's interested in potentially shorting IBM. So let's go take a look at a signal, see what we see out here. And if we look at the monthly time frame, it could or should form a TD9 count top between this month, the month of December, but then also through February. So you got potential TD9 count topping pattern out there. Let's leave that off to the side. Let's look at the weekly time frame chart. TD9 count top, Rhodes momentum indicator top. Prices pulled back and has tested and rejected that green oscillator and change line for the last 3 weeks out there. That's more of a bullish signal than a bearish signal, but because we have a bearish top and we've got key level of support holding, we're just going to call it neutral, Tom. So the weekly says, yeah, I don't think so, because the oscillator and change line, which right now is at 305.77, is holding. And now we take a look at the daily time frame. The daily time frame shows that price is traded above its oscillator and change line, shows that it's traded above profile resistance at 295.44. Those are both bullish conditions. What IBM is doing, though, it is testing a swing point from back on November the 12th. And that swing point had volume of 6 million shares. Today, so far, in 2 hours of trading, you're up with 1.3. So you're about a 4 million share a day. So you're coming into that swing point with a light volume out there, but you've got to reject that swing point, and that means you've got to close below 314.53. If you do that, you would have a test and rejection of a swing point on lighter volume that could suggest lower price. But boy, you've got support maybe at 309.25, 305.71. It's not the most ideal conditions for a short out there. But I've given you the information about IBM, what its chart panels are communicating to us, and hopefully from there that'll assist you with your decision making. So Texas Tom, thanks much for your request. We'll look forward to your next one. GTE writes in, would like to look at his favorite stock, which everybody knows is XPEV, or one of the favorite stocks, Hang Seng being another. Now, in the case of XPEV, I don't have any kind of a bottom pattern for its daily time frame. What we do have is price trading with inside a new bullish structured daily profile. That formed on Friday. The buy zone on that GTE is between 1889 and 1958. Because we are trading above 1958, and we did that on Friday as well, what price should do is test its oscillator and change line, currently at 2067. If it can clear the oscillator and change line, then what XPEV should do is make its move to 2165. That's the top of that new daily profile. Weekly time frame says I'm going to run out of energy at 2068. 2067 is that daily oscillator and change line. 2068 is the bottom of that weekly profile. So that's the key area for you to be watching with regard to XPEV out there. Steve Rhodes with TFNN. We'll be right back.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Trader's Edge is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. Let's take a look at UPS. This is for Fletch inside the Tiger's Den. We take a look at UPS on Thursday of last week for its daily time frame. It generated a Rhodes momentum indicator topping pattern. And right now you've got a nice little rally today, but what you need to see is for price to close above its green oscillator and change line, 96.39 out there. If it can close above that, it's going to neutralize the signal. If it acts as resistance, it could be signaling to you and I that price wants to get back to its support level, the next support level, which would be down at the top of its current profile at 90.58. That's the daily time frame. The weekly's got no topping pattern. In fact, it has a nice bottom that formed out here back in September 12. It was a nice Rhodes momentum indicator bottom signal. You also formed a nice T9 count bottom pattern at the end of September as well. So nice bottoms. I know that you're more of a longer term trader, I think, Fletch, out there. So on the monthly chart, once a daily, whatever it's doing out there, what you're looking for on the monthly chart is the next move should take you up towards the 109.80. That'd be the center of that bullish structured profile. That's the level where a counter trend rally, if it were only a counter trend rally, would come to an end. But the daily is one that you got to kind of keep your eye on right now. That's the only one that's got that topping signal. See how price behaves at that oscillator and change line. If it's unable to cross it, you could see a bit of selling pressure. Where would things head to the downside? No different than 90.58. Which is really the next first target for UPS. So thank you for that request. Let's take a look at Snow. This is from Mohammed, Snowflake, that is, SNOW. Trading out. That's the wrong, sorry, hit the wrong tab. I'll get there. We take a look at Snowflake. You've got a... So you got a daily A to B equals CD pattern that could form today. So the B point has volume of 6.8 million shares. This has done 2.4 million shares. So you've got volume today. So the daily time frame, let's go ahead and draw the A to B equals CD pattern to the downside. Price has got to close below the swing point at day's end. So I'll give you that number. We'll also give you where that price projection is. Looks like it was just about a 0.786 retracement. So it's not really too shabby out there. The price point objective, the 1-to-1, gets around the 216.18 level. The number that price must close below today is 228.58. We're at 225.49 out there. So that's a likely outcome. No other bottoming signal. The next area of support would come from the weekly profile, and that's at its bottom at 223.61. So the only way you get to the 216.80 mark out here, Mohammed, is price has got to be able to take out that bullish structured zone on that weekly profile. The monthly time frame, we're just trading with inside its profile. May go on to form a TD9 count top at the end of this month. Don't know, because price has got to close above the close of bar number 5, and that right now is at 238. We're trading right now at 225. So it's really going to be about the daily and the weekly. You're watching the weekly just simply as far as profile support. The daily, you're watching for some type of bullish reversal candle should price get down to that 216.80 level out there. So, Mohammed, hope that helps you out. Thank you for your request. You also want to look at ticker symbol VST. Let's pull VST up on our screen and see what we have out here. It's trading below the bottom. It's trading below profile on this daily time frame, and it's red oscillator and change line into a swing point from back on the trading day of November 21st. 6.3 million shares traded hands that day. We closed inside it on Friday with 4.5. Today so far in 2 hours of trading, 1.5. That's another 4.5 day. So price is backing up with lighter volume into that swing point from November the 21st out there. Hey, with lighter volume, we can still get down and test that low. So let me give you that low, which is at 162.44. The weekly time frame chart. The weekly time frame chart needs price to poke itself below 162.44 to trigger a TD9 count bottom pattern this week. So that's another level for you to be watching, Mohammed. If you get that, you'll have a weekly TD9 count bottom. And if you don't, well, then you'll have a TD9 count, but it won't be a bottoming pattern with price below profile support and its green oscillator and change line. It would increase the odds of a further move lower. That's in essence the message from the monthly chart. The monthly chart has a Rhodes momentum indicator top. Price is trading below its green oscillator change line. It has lost momentum. Therefore, the price target would be its profile levels, and that's between 103.44 to 129.30 out there. So one step at a time out here, Mohammed. And the first step is watching how price deals with should it get down and test that low from November 21st out there. And again, that number is at 162.44. So thank you as always for your request. XPEV writes back in. Would like to take a look at light sweet crude. So let's pull its charts up on our screen. Light sweet crude, we're trading in the January contract right now. What we can see on a monthly time frame out here, X, is that price has a Rhodes momentum indicator top. And price has found support basically at its breakout level, 57.04. 57.04 is going to be the real key level out here for light sweet crude. If we were to close below that level, we're likely going to see lower price. The weekly time frame for light sweet crude is nothing more than a consolidation with inside profiles. That's between the range of 58.93 all the way up to 63.08. And finally, on the daily time frame, you can see pretty much a sideways to slightly lower pattern the last couple of months out here. Maybe the last month is really the time period. And right now, though, what you also have is price trading with inside its profile. That's between the range of 58.42 to 60.57 out there. So that's what's going on with light sweet crude. Hope that helped you out, XPEV, and thank you for your request. Let's do this. I'm just checking to see if there are any other requests in. Yes, there is. And that is to take us from Joe. Would like to take a look at oil. So in looking at oil, I don't know which natural gas contract. Let's go find out. Let's find out what Boyle is, because Boyle could be on the February contract at this stage of the game. So let's put in Boyle Holdings. Let's go try to figure out ProShares Ultra. That ought to give it to us. Where's the holdings? Holdings, here we go. As of December 5th. It's got the March contract. Okay, so important to be paying attention to. So it's starting to roll out of the January contract and into the March contract of 2026. So let's do that first, okay? Before we go look at Boyle, let's go look at what its underlying instruments are doing. And let's start with the March contract for natural gas out here. Just a small amount right now is inside of Boyle, but it's in there. And the UNG probably is totally different. The UNG is probably still just January, and if anything, it'll be February that it adds. But let's go find out here. So in the case of the natural gas contract for March of 2026, we can see that this, it looks to me like today, this is confirming a sell the D point top out here. So let's go do the A to B equals CD pattern. There's our A to B point. Let's just slide this over to that C point out there. And, we're going to get a sell the D point top today. Price is trading already below its green oscillator and change line and below the top of that daily profile, 394. We'll come back from this break. We'll finish looking at natural gas out there. We'll look at the January contract as well, and then we'll also look at oil. Steve Rhodes with TFNN.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. So we're taking a look at the March contract for natural gas as part of the ETF boil out there. I forgot who made the request. Doesn't really matter at this stage here. So the daily time frame's got that sell the D point top. If price closed below 394 today, the next level of support is at 3.905. If price closed below 3.905, we ought to see a run towards 382. If price closed below 382, we ought to see a run towards 366 to 373 out there. And all those figures were coming from either the daily or the weekly chart. We were take a look at both, trying to identify where support levels are, which is exactly what we did. So that's what's going on with regard to that contract. Now, Boyle, I believe, is a long position for natural gas. So this is natural gas for the March contract rallied for 5, 6, 7 consecutive days. A 2 to 4 day retracement would be normal. So you're looking to take a long position inside Boyle, maybe watch these levels out here, see how price deals with support areas, but maybe it's just a 2 to 4 day retracement. Now, there was also a bit of the, most of Boyle right now is the January contract for natural gas. Similar patterns, but not the same. Not the same levels of support or anything. And make sure you continue to check back on that Boyle website. That will go ahead and give the information you're looking for. So here in the January contract, we would say, not so bad. Not so bad just yet. Why? Because it is likely going to confirm a sell the D point top today. But price right now is testing and is holding basically its oscillator and change line, which is printing at $4.96 out there. We're at $4.95. So price is testing support. If price were to close below 495, then we're likely looking to move to 483, the top of the daily profile. Below that, we'd be looking at 465. And at 465, that would get us down also towards a 460 level, which is the top of that weekly profile. It would also be where its weekly oscillator and change line is located. So here you're watching the 496 level out there, and then watching really to see how price responds as it gets back to $4.83 out there. So both those suggest that they are going to head lower. Now, in the case of Boyle, we really can't tie the two together. So just keep an eye on those charts. charts. You don't have to trade the natural gas future charts, but you most certainly need to know what they're doing and what is inside the instrument that you are trading. In the case of Boyle out there, Boyle shows a gigantic top, shows an island top reversal on an A to B sell, a sell the D point top out there. So that is what your confirmation is today. It's an island top type of reversal candle out there. But Boyle is just simply going to take its P's and Q's from the January and March 2026 contracts for natural gas out here. Boyle's next level of support, where the trading below its oscillator and change line at 38.22, would be down at the 33.64 to 34.29 level. 35.71 happens to be the top of the weekly profile out there. There's nothing on the monthly chart that's going to assist us with that. Just for the heck of it, since we're here, let me do this one more time. I want to see what UNG's holdings are. UNG holdings. So let's see what UNG is. Holdings. It's got the, what does it have? Where is it? Just the January contract. Not much. So this is getting ready to roll. It's just not telling us what it's getting ready to roll into. More likely than not, it's the February contract. UNG pretty much stays within line of the lead contract out there. So I'm thinking that natural gas is. Let's just be thorough here, just to see what everybody's looking at. What we're all looking at with regard to natural gas out here. Now we're looking at the February 2026 contract out here. It likely has a sell the D point top as well. But now what I want to do is at least be able to provide you with support. Whoever was that asked, my apology for not remembering that or writing it down. But here, yes, natural gas. So the next level of support on a daily time frame likely at $4.45. Below that, you'd be looking at $4.34, and below that, $4.19 out there. So you got those sell the D point tops, at least a 2 to 4 day retracement out there. Watch how price deals with those different, depending on what instrument it is that you are trading. Meaning if you're trading the ETFs out there, just pay attention. If you're trading UNG, I'd say watch the January and February contract right now for your information. So hope that helped everyone out. Let's go take our next request out here. The next request was what? Red looked at Lightspeed Crude. I don't think. Hold on a minute here. Yeah. Okay. So the next request out here is Lulu. This is for ELO inside the Tiger's Den. So we take a look at this instrument. Let's pull the daily back. You've got a bearish engulfing candle that is forming today, but I don't see an A to B equals CD pattern to the upside or anything along those lines. So what we have out here right now is prices trading above resistance. The resistance of its oscillator and change line, 179.32, and the top of its profile, 175.07. So from a daily perspective out here, this instrument is bullish and should rally further. Maybe this is just a couple-day pullback to test support. That first level of support would be that 179.32 level, the daily oscillator and change line. The weekly time frame has generated a bullish profile change in trend. In order to accomplish that, because we didn't really, well, let's take this back. Maybe we did have a buy the D point bottom pattern out here. Let's go look. So as you can see, a couple of different A to B equals CD patterns to the downside. I don't think the big one was completed, but just because I think that doesn't mean that that's the truth. The truth is, let's go put the A to B equals CD pattern on the chart and see where we actually get to. And then we don't have to rely on Stevie's what could be lying eyes. Yep, there we go. Nope, they weren't lying. It did not make the 1-to-1 A to B equals CD. That doesn't mean it hasn't completed an A to B equals CD pattern downside, because with inside that large C to D leg is another A to B equals CD pattern. So let's go draw that in. This one, it looks like it has made at least the 1-to-1 price projection level, but let's go find out. And voila, it's like close, but no cigar. 146 is where it needed to get to. Only got down to 159. So, okay, doesn't matter. You still give a bullish profile change in trend. You got 2 weeks above the top of that profile. It should rally further, it being Lulu. Let's go take a look at the monthly time frame chart as soon as Stevie can get there. Monthly time frame chart is Too bad. The low 177.93, bar 9, 160.46. What was this low? 159.25. So no TD9 count bottom pattern out there. No A to B equals CD pattern. We've already kind of gone through that one. And prices trading below support. So this chart is super complicated. The message coming from this set of charts is complicated out here. I say daily because we're trading below Friday's low out there, at least a 2-day retracement, 2, 3, 4-day retracement out there. And watch to see if every now and then there are charts out here. And this is one of those that Stevie does not have a clear read on. Clearly, you can tell that. We come back from this break. We're going to finish off the show taking at FERG for ELO and NVIDIA for Duncan. Steve Rhodes with TFNN. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. ELO wants to take a look at the charts here for Ferguson Enterprises. FERG is a ticker symbol out here. Ferguson at this moment in time is trading below Friday's low. Friday was trading below Thursday's low. We're trading below its green oscillator and change line. Not that I see a top out here, but it's lost momentum. And I would say, ELO, this is day number 3 to the downside. You probably bottom out by tomorrow, but price could be gunning for that top of its profile, 241.52. The weekly time frame chart does have a Rhodes momentum indicator top that led to what looked like could be a bottom, which was price getting back to the buy zone between 226 and 233 out there. And the monthly chart does not have any kind of a topping signal, sort of. I do see a wave number 7 potential out there. And if that's in fact the case, price would likely target the 233 level. So right now for Ferguson, the daily time frame chart hasn't done much more than a 4-day retracement since the entire time period we're looking at our screen out here. So if this thing still remains bullish out here, ELO, the bottom is either today or tomorrow, most likely. So I hope that helped you out. Let's go take a look at NVIDIA. We know everybody wants to take a look at NVIDIA, see what it is doing. NVIDIA is trading out right now at 183.58. It is trading above its oscillator and change line and trade above the center of its daily profile, likely to run towards 190.71, knowing that at 189.31, it's the top of the weekly profile out there. So that is resistance. The monthly chart for NVIDIA, Rhodes momentum indicator top, but price finding support at that oscillator and change line. That's the real key number here for NVIDIA, is that green oscillator and change line for its monthly time frame, and that currently is printed at 179.79. As long as price remains above that, all is good in NVIDIA land. Folks, thanks so much for joining me today on Marvelous Monday, because that's what I want you to have. I will not be able to host a show tomorrow. I just found out. Something came up. I will not be able to host the show tomorrow, but I'll be back with you at 11 a.m. on Wednesday. So have a marvelous Monday. Take care and be safe out there.